These two worlds don't talk to each other because they don't have working APIs. There isn't a software or a middleware or even a protocol to define the transfer of information. Therefore, the information is partial or non-existent. We are kind of disrupting the traditional invoice financing world, actually, because that tends to be slow. It tends to be prone to manual errors. It tends to take time to get credit assessments and to actually deploy funds. There is a fintech world and there's a paytech world. These two worlds today don't talk to each other. These two worlds don't have a middleware, a software. They don't have the intelligence to interface each other. They barely have working APIs. That means that information doesn't flow between the two.
So another episode of Navvai Shift. We have the pleasure of having Lawrence Gilioli on, the founder of Lenderwise. So Lawrence, how are you doing?
Excellent. Very well. Thank you.
Perfect. So I much appreciate for jumping on this call with us today. So of course, we're looking to get further insight into your business and also how you see AI developing in the near future, essentially in the finance world. But just for the viewers listening, can you give us a bit more insight into Lenderwise and also yourself?
Sure. So I'm the founder of Lenderwise, and we are a fintech and paytech platform. Actually, we're specialized in the digital finance arena and in telecom receivables in particular. My personal background, I was born in New York, raised in Italy. I'm a dual citizen. I have a technical background and a creative mindset. I've always developed new technologies and services based on new technologies. And so AI, of course, is a very exciting new frontier for us.
Yeah, amazing. So Lawrence, in the telecom industry, they are very notorious for a 50-day cash flow gap. So what makes finance in this space so complex?
Very good question. So telecom indeed is a digital asset. Phone calls are digitized. So anything associated to that arena means that it's not a tangible asset. That makes it different. We have developed a technology which allows us to capture and validate the underlying assets. So the peculiar things about the telecom space is that we are talking about telecom receivables. We are talking about business to business services, an industry actually worth $64 billion, which is led by tier one telecom operators, and where there is a payment mismatch in the supply chain. So we are actually funding supply chain networks for telecom tier one operators, making things better, faster, safer for themselves.
I see. So you did touch on obviously that you're developing a lot of like technologies in the background. What kind are these technologies going to be using AI, and how do you see technologies like improving invoice finances and cash flow management?
So we are kind of disrupting the traditional invoice financing world, actually, because that tends to be slow. It tends to be prone to manual errors. It tends to take time to get credit assessments and to actually deploy funds. So the technologies that we've developed relate to the onboarding of clients, to the credit assessment of clients, to the deployment of funds, to the monitoring of payments, and to making sure that if something is funded, it actually gets paid back to the funders. So we've developed a technology which allows us to basically sit in between a bunch of lenders, institutional lenders, and a bunch of clients which need liquidity to solve the payment mismatch that exists in a lot of business B2B sectors. We are basically converting invoices and pro forma invoices into liquidity. And we're doing this with a technology which is mitigating risks. AI has an essential role in all of this because it allows us to better understand client needs. It allows us to better understand payment behavior. It allows us to identify any wrongdoing. And therefore, AI has an essential role in mitigating risks and in making sure that we can deploy more and more funds in a safe way.
Perfect. And what role does AI play in streamlining payment processes and reducing inefficiencies, would you say?
So it has a very key role because, first of all, it means that we are automating processes, we are automating checks, we are automating underwriting decisions, we are automating a lot of the steps that are needed to make sure that things are safer for lenders and ultimately safer for the clients themselves. So it means AI is being used for automated credit risk assessments. AI is being used to implement the execution of smart contracts and the actual deployment of funds. And it means that it's being used also for better cash control, better cash dominion. The bottom line is AI is being used for the payments and for the decision making, making things faster, safer, and at lower costs than typical and traditional non-automated and non-AI systems occur. I mean, basically, automation is much better.
Definitely.
Understood. So we can obviously see that Lenderwise is ahead of the curve in terms of like technological advancements. But would you say in the whole kind of financial service industry, they're adapting to these technological advancements, or would you say like there's going to be like a massive gap in obviously the years to come when AI gets more and more used and developed?
There is a massive gap right now because today a lot of the decision making occurs manually. It occurs with an internal treasury that has to decide to purchase an invoice or an asset and then needs to go online banking and manually put the data in. This is because we are ultimately talking about two different worlds. There is a fintech world and there's a paytech world. These two worlds today don't talk to each other. These two worlds don't have a middleware, a software. They don't have the intelligence to interface each other. They barely have working APIs. That means that information doesn't flow between the two. If information doesn't flow between the two, that means there are two separate databases. One database on the fintech side, which has to do with the purchase of the assets, the other database, which has to do with the actual cash movement. If these two databases don't talk to each other, information cannot be reconciled. The information cannot be auditable in real time. So we've not only developed the middleware for these two worlds to talk to each other, but we're implementing AI to make it better and faster and safer.
That's amazing. So it's very clear that the fintechs are definitely leading charge in this produce, essentially. But then how can data-driven insights improve financial decisions for telecom businesses?
So obviously, the best decisions are made with the greatest amount of information. So on one side, you need quantity, and AI can be used to do more in-depth searches on the individuals, on the beneficial owners, on the underlying assets, on the companies. On one side, it's a question of sheer quantity of information, and AI is very good at analyzing huge quantities of information in real time or close to real time. On the second side, it's a question of making better decisions and analyzing with more intelligence. So it's not just a question of sheer quantity, it's a question also of quality of the data. And AI allows us to better segment the data, to better pinpoint the correct data, and to focus on the right data to be looking at. Obviously, if one does an analysis of wrong data, the outcome is going to be wrong. So it's essential to have quality data. It's essential to be pinpointing on the correct data. And AI is not only good at identifying the right data, but it's also good at refining that search and making it better and better over time. So AI is essential at analyzing quantity, quality, and pinpointing the actual decision making.
Perfect. And in relation to all these, so AI definitely has got a lot of benefits. But what do you think are the main reasons people are hesitant to adopt these new technologies?
That's a great question. In the end, I think it has to do with basic human personalities and characters. Some people are ready for change. Some people are afraid of change. Some people are afraid of technologies, especially for something that's so romantic like AI. You can think of AI as something that goes beyond human decisions and something that becomes a robot and something that becomes scary. Of course, this is not true. Of course, AI is programmed by human beings, and of course, it's used by human beings and it will continue to be used. So in the end, AI is not to be scared of. The adoption of AI and change means there has to be training. there has to be education, and there has to be trials and testing. The best way to overcome fear is to start in a small case and get accustomed to it, and then grow step over step, and to take it one step at a time, like a small child that's learning to walk.
Yeah. So Lawrence, you did touch on it previously, but in relation to, as you said, a lot of training is needed, a lot of different external factors to assist people to actually adopt it. What other barriers would you say there are about with financial or telecom businesses struggling to adopt these technologies?
So, of course, there are some barriers which are technological also. It's not just a question of human beings and human personalities. It's also a question of technology and the embeddedness of technology and the ability to access information, which could be sitting in different silos. It could be separate. It could be not interfaced. So kind of coming back to the bigger picture I was just drawing of these two worlds, the fintech world and the paytech world. These two worlds, if they don't talk to each other because there aren't working APIs, if a bank, for example, doesn't have a sufficiently sophisticated API, and by sufficiently sophisticated, I simply mean data and information, which unfortunately is not easily shared. A bank, and I say this because banks admit it to me, banks barely have working APIs. They don't provide all the information. They might have one API that tells you the balance. They might have one API which tells you who the beneficiary is. They don't have complete sets of APIs which give complete visibility over transactions. That's a problem. And that's an obstacle leading to your question, which means there aren't just barriers that are psychological barriers. There are technical barriers. There are legacy systems which aren't used to access and to external connections, whether it's for questions of security or questions of simply archaic systems and archaic databases which don't rely on today's technology. So there are a series of technical barriers which definitely play a negative impact on this evolution, which means there's a great opportunity for companies like us, like Lenderwise, like Navvai, and like companies doing intelligent ways, creating intelligent ways to interface data.
So how would you say, Lawrence, businesses can like transition from more kind of legacy financial models to like AI-driven solutions with latest technologies?
So the easiest way, I think, is the least obstacle route. That's kind of a philosophy I have in general, because there's enough obstacles already in life. And the least obstacle route is, first of all, identifying the opportunity and the advantage. Does a solution solve? What advantages does that solution bring to the company that's adopting it? So the first thing is clearly understanding what the advantages are. The second thing is, okay, what's the roadmap to get there? What's the simple step? What are the simple stepping blocks to get there? You don't have to do everything and transform everything overnight. You can first take a first step, which makes things easier and faster and more simple, actually, when it comes to adopting these new technologies, which will constantly grow over time, because we have to actually realize that AI is essential, but it's not an end. It's a mean. It's a means. It's a tool. We are getting there, and it's constantly adapting, and it will constantly get better and better over time. And that's what we need to feed into. We need to feed into a system that we control, that gives the results that we want, with an adaptive model that's based on the information that we feed into it.
Yeah, 100%. Definitely about the right data points that you are actually putting into these systems to actually get the results. And I feel like, so what would you say are the risk of fragmented or outdated financial processes when scaling a business, or even still trying to maintain a business?
So, well, obviously there are risks in today's life. In every business, that there are risks. So there's a risk in adapting new technology. There's also a risk, and some would argue that's even bigger, if you don't adapt to change. Change is essential in today's world, especially if you're talking about technology, because in today's world, if you start developing something today, in 6 months, it might be obsolete. If you are using tools and programmers and coders that take 6 months to develop something, you are risking to use and invest in something which might be archaic in 12 months. So it's essential to adopt new tools which are fast, quick to implement, quick to adapt, and quick to give advantages. So the risk is actually if you don't change, if you don't adapt, if you don't exploit the new technologies, because there are other companies out there that are doing it. Competitors are doing this. And if you don't take advantage of the opportunity, you are potentially risking your existence today.
Understood. So what would you say are the main kind of challenges companies face to ensure smooth collaboration between, I don't know, like fintechs, telecom providers and investors?
So the biggest risk is if there isn't the mentality of sharing information and connecting information. Information has to be connected via APIs and there has to be a spirit of collaboration. Doesn't mean you're giving away anything for free. Doesn't mean you're giving away IP or information which is strategic. It means sharing information for better decision making, for faster decision making, for safer decision making. So it's really a question of taking advantage of the way the world is moving. Today, technology is becoming more and more transparent, more and more cloud-based, and more collaborative. That means that in that collaboration, there can be multiple players, multiple suppliers that are adding a piece of information or a piece of a process. That process fits into a mosaic. That mosaic becomes the overall picture. That picture gets drawn and designed and monitored by AI, making it a prettier picture, making it a more colorful picture, and a better picture from the point of view of safety, security, and opportunity.
Man, that is amazing. So I think it's definitely clear AI is playing an increasing role in the financial automation. But then how would you say you see it transforming in the telecom finance in the next few years?
Great question. So telecom financing is like any other financing. There are big telecom operators that have to pay suppliers. The suppliers can be hundreds of suppliers. They have to be paid in timely ways, knowing that when you're talking about payments, you're talking about cash availability. You're talking about treasury services. You're talking about the need to convert currencies. You're talking about the need to cash in and to pay out in a very efficient way. So this takes technology unless you want to do it manually. If you do it manually, it takes time. That means there can be human errors, there can be human discretion, there can be human delay, all of which doesn't fit well with a big supply chain network. So technology is needed. Fintech is needed to manage the purchasing of invoices, the payments of invoices, and paytech is needed to actually transfer the value. AI is needed to better understand the treasury needs, the funding requirements. There might be some months where a telecom operator has cash availability and wants to invest it on a short-term basis. There might be other months where the telecom operator wants to keep its cash and actually needs cash, so it can sell invoices, convert that into cash. There are months, therefore, which the needs can change on a monthly basis. In some months, you need money. In other months, you can give money. The technology that Lenderwise has developed allows a tier one operator, a CFO of a telecom operator, to have his own dashboard where he has complete control over his own liquidity, where he can forecast his needs, where he can predict the payment behavior of his clients, where he can predict the payment needs that he has to have, and he can decide on a simple dashboard, he can decide what to sell, what to buy, what to invest in, or what to expect to be paid in a very simple dashboard. So this is the way fintech and paytech and telecom is moving. It's moving towards a technology which gives complete control and security to a CFO of a big telecom operator, giving him flexibility, giving him an optimization of the liquidity of his company. whether he needs it for his own shareholders, his own stock markets, or whether he needs it to get better deals from the suppliers. Because obviously, the greater control or you have over the most basic asset, which is liquidity, the greater the control, the better you can deploy and the better you can optimize your company's needs.
Right. So, Lawrence, you basically, well, you've touched on so many different benefits of AI. You've taught me a lot. Like I'm a bit overwhelmed in case you can't tell. But I was going to ask, so with AI, like, how would you see that improve risk assessment and like financial decision making?
So when it comes to risk assessment, obviously you have to analyze a lot of data. When you're analyzing a company, you are looking at who's the beneficial owner or who are the main decision makers. You have to look at those individuals. You have to trace their backgrounds. You have to know where they live. You have to know if there's anything negative on the individual. Then you have to do the same on the company that needs the funding. You have to verify third-party credit reports, third-party credit analysis. You might have to analyze insurance information, whether that company is insurable or not. So there's a lot of data coming from multiple sources. That data needs to be read in real time. The more information you have, the better it is. That data needs to be analyzed. It needs to be put in a standard format so that it can be analyzed, and it needs to be analyzed with certain criteria. That criteria can be payment behavior, historic payment behavior. It can be any negative messages. It needs to be done in an intelligent way because, no one's perfect. And sometimes there can be problems that have been overcome. So the data needs to be intelligent enough to analyze if there's bad information, what were the causes of that? Has it been resolved? And therefore, can the company be funded, even if there were maybe bad things in the past? And this is essential because today's underwriting doesn't have the ability to make differences between past and present. And it doesn't have the ability to predict based on that. So AI is essential on one side at capturing the information, at analyzing the information, and at implementing parameters which allow one to better forecast the ability to pay back if there's a loan, or to pay the invoice if it's factoring. And so AI is essential at making better decisions, faster decisions, with more modular and flexible outcomes in the interest of the funder and in the interest of the client themselves. Because once again, problems can happen. Well, the important is to understand, is the company out of that problem? And therefore, is it a very good funding opportunity? In the end, a funder wants to deploy money and they want to be sure that they are paid back, and they want to price the interest rate based on that risk that they're taking. So sometimes if it's a very safe investment, the interest can come way down. Sometimes if it's a high risk, the interest goes up. The AI is needed at better refining what that risk is and what the appropriate pricing for the interest rate should be. And once again, we've seen this in many occasions. We've seen some clients that had a bad background, but they completely fixed it. They completely turned around and they became one of the best investments because not only did they pay back promptly, but they paid initially at a higher rate until they fixed up their payment behavior and their history, and therefore they were able to benefit from AI because not only did it allow them to receive funding, but also to reduce the cost of funding over time as they demonstrated a good payment behavior.
So would you say there are any other promising advancements in your industry?
There are tremendous advantages in AI and in the industry as it expands. First of all, I would say the greatest thing is that the adaptability of AI. AI can be adapted to almost anything, frankly. I mean, not just to all the things I was mentioning in finance and in Fintech and paytech, but also in any other field. I mean, we are seeing it go from finance to poetry, to analyzing football scores, and to betting, and to, the applications are endless. And to be honest, I see this once again, not with fear. I see this as having a fantastic assistant today. Today, we can all use AI as the best assistant because they are fast, they are transparent, they don't get sick, they don't complain at anything we ask them, and we can even treat them badly and they don't get mad at us.
Hopefully that stays that way. Hopefully it stays.
Yes.
So do you think businesses are ready to be fully automated with financial processes, or do you think human oversight will always be necessary?
Well, human oversight is always necessary. Yes, always for everything. Once again, I see this AI as a tool which is controlled by human beings. They will not control us. We will always control AI. It will make it so easy and fast that maybe we could make wrong decisions because they make it so easy for us. So we'll have to be careful that we don't shoot the gun too quickly when AI is proposing a solution. We should continue to have a very prudent use of this fantastic tool. But yes, human beings will continue having oversight over this. I must say that I am very impressed by statements of, well, not to mention Elon Musk, but when Elon says that the entire human knowledge is already within AI's data rooms. I mean, today, mankind's knowledge is already fed into these systems. On one side, that's pretty mind-blowing. On the other side, it means that we can make better analysis of this. We can make faster decisions once again. And once again, just as long as it's run by human beings, that doesn't scare me.
Yeah, no, amazing. And obviously we have touched quite a lot on AI, but I also wanted to get your insight into blockchain as well. So in relation to blockchain, do you see enhancing transparency in financial transactions? And also, can you delve a bit deeper into the benefits of what you've seen with blockchain?
Yeah, so blockchain, yes, is also a very intelligent and a very interesting technology. I kind of see blockchain with two hats or two features to it. On one side, it allows to log information and to have a ledger of information which can't be changed or stolen or distorted. So on one side, it's a way of logging information. On the other side, it's a way of implementing automatic decisions and smart contracts. I make this distinction because I think blockchain's real value is on the second side of things. It has allowed technology providers to automate decision-making, to automate with smart contracts, the actual decision-making and the execution, sorry, not the decision-making, the execution of decisions that have been made. I think there's great value to that. That technology doesn't require the logging side of things. It doesn't require blockchain. And so therefore, blockchain has indirectly sparked a lot of software platforms to automating execution, which is great value. Blockchain, the logging side or the creating ledgers, is very interesting, but it's a bit expensive. Blockchain in itself is expensive. If you're talking about minting and burning, when you're talking about billions and terabytes of well, not even terabytes. It actually is a very expensive technology. So I would argue that it's best to further refine blockchain into less expensive solutions, because the ability to have immutable data, of course, has great value to it. And yes, that has been implemented in finance. It will continue to be implemented in finance, both from the ledger point of view and from the point of view of smart contract executions.
Understood. So looking ahead for Lenderwise, we understand that you've kind of made your tool that bridges the gap between the two industries that you mentioned previously. So what's kind of next for Lenderwise, would you say, in the next 12 to 24 months? Like, are you currently building more tools? Are they going to be AI driven? I'm just intrigued, and for the viewers as well.
Yeah, so once again, the two worlds I mentioned is the Fintech world is one industry and the paytech world is another industry. These two worlds don't talk to each other because they don't have working APIs. There isn't a software or a middleware or even a protocol to define the transfer of information. Therefore, the information is partial or non-existent. And that means that there's separate silos of information, meaning the information can't be reconciled in real time. It means that the existing worlds are separate. they can't be reconciled, they can't be audited in real time. So the technology we've developed allows a full reconciliation in real time of asset purchase and cash movement at the same time. And we will continue on this journey because we believe that it's an essential tool for any bank or any non-bank lender. They need this kind of technology because a bank has lots of money. They want to deploy it in a safe way, in a scalable way, in a transparent way, making sure that they are mitigating their risks. And the best risk that we mitigate is indeed that we are, by virtue of the integration of these two worlds, by virtue of the fact that we are executing with smart contracts, decision making, we avoid human intervention. Human intervention means potential human delay, potential human error, potential human discretion. So banks and non-bank lenders need a technology. So I see ourselves going in the direction of pure platform services for banks and for non-bank lenders that will really, they need this kind of technology to mitigate the risks and to deploy more and more money in safer ways.
Of course. And how would you say you balance automation whilst ensuring you're maintaining this relationship with the telecom providers?
We use automation for the telecom operators because it allows to eliminate human treasuries, which have to purchase something or pay something, go online banking, put the data in, perhaps making a mistake because they'll have to put an invoice number, a currency, an amount, and perhaps other data. If that information is erroneously inserted by bad doing or by human error, that means that things have to be fixed at the end of the month. And we have seen this many, many times. We have been told by tier one operators that they've had treasuries that were supposed to net credits and debits. Instead, they actually made payments. They didn't get the money back from their suppliers because of this. And so errors which were made, whether that was intentional or not intentional, errors can be made. And in our model, we say that we prevent errors rather than fixing them at the end of the month. We are curing, rather than curing something later, we are preventing that flu or that disease to occur in the first place.
Yeah, no, definitely. So beyond AI, what other emerging trends you say are reshaping the telecom finance over the next, let's say, 5 years, would you say?
Wow, that's a big question because
There's a
5
big
years,
question.
5 years is a big,
Yeah.
big way. But but so I look at this at a bit shorter because of how quickly things change. I mean, let's even AI. I mean, we're talking about AI today, and it's already impacting all our lives. But 6 months ago, 12 months ago, we weren't talking about it. AI itself is going to be accelerating change, and so I think we can look at the next 6 to 12, maybe 18 months. It's hard to look beyond that because I'm sure there will be something newer in 18 months at least, which will probably be an evolution or an integration of what we're talking about today. And it comes back once again to the fact that change happens and change will continue to happen at a faster and faster pace. So all of these technologies have to be understood, have to be used, have to be monitored and controlled so they don't get out of hand, of course. We have the ability to do that. Human beings are smart creatures. We've invented all of this in the first place. So there's no reason for us to not control it in a safe way, following regulation, following, of course, all the rules that are being implemented. It's true that technology moves at a faster pace than laws, than governments do, but that's the way it is, and that will probably always happen. Fortunately, there are some very smart countries that are faster than others. And the UK is actually, I would put in a good, the UK is definitely, and the US are two countries which are adapting change very quickly, and Chinese also. Chinese, unfortunately, for their own interest, but well, I shouldn't say that, but fortunately, there are some governments that are moving very quickly.
That's definitely true. What advice would you give to telecom businesses looking to embrace AI financial solutions?
A telecom operator absolutely needs to exploit technologies to make faster, safer decisions when it comes to its own clients and its own underwriting. Likewise, it needs to automate outgoing payments to suppliers and potentially to sub-suppliers because it needs transparency. It needs to be sure from when it comes to even money laundering. It needs to be sure that the money it receives comes from safe sources. It needs AI to better analyze the origin of payments, the origin of clients. It needs to understand better how safe it is to give a credit line to its clients. It needs to pay more quickly so that the suppliers provide better services. Because obviously, if a tier one telecom operator is not paying in timely ways, or if it's exploiting payment mismatches, if it's paying its suppliers on 60 days, knowing that its supplier needs to pay the sub-supplier on 7 days, then the tier one operator knows that it's paying with the cash flows of its supplier. If it can get away with that, fine. If the supplier cannot sustain a negative cash flow based on the payment flows, then that supplier might be in difficulty. It might have to interrupt its supply. It might provide intermittent supply, which is not in the interest of a tier one. A tier one wants stability, wants quality, wants safety, wants to be sure that suppliers and clients are happy. This is essential to any tier one operator. They need stability, quality, and happiness of clients, suppliers, and shareholders. They're all intertwined.
Thank you so much for sharing your thoughts on AI, fintech, and the future of telecom finance. So before we wrap up, where can listeners learn more about Lenderwise and also connect with you?
Thank you. So Lenderwise is a fintech and paytech platform. We provide our services as risk mitigating services when it comes to choosing clients and to monitoring and managing clients. We provide these services directly to banks and to non-bank lenders, allowing them to deploy their existing portfolios in better, faster, safer, and cheaper ways, making sure that they have a safer way of deploying their funds. On the other side, we actually originate in the telecom space and actually in the digital finance space. So we are funding the digital economy. We are providing liquidity to telecom operators. We are giving the ability to telecom operators to pay their suppliers and their supplier networks in faster and safer ways and in cheaper ways with respect to other traditional international banking rails. We therefore have two very unique features to us. On one side, we are a technology provider. On the other side, we are originating in the telecom receivable space and in the entire digital economy.
No, perfect, amazing. Much appreciated, Lawrence, for giving all your insight. So if you enjoyed this episode, don't forget to subscribe, check out our latest in AI and fintech innovations on our YouTube channel, the Navvai Shift. And Lawrence, thank you again, much appreciated.
Thank you very much for this opportunity. Best regards to all.